Hi guys, I'm HJG White from eToro, and this is how Warren Buffett knows who is telling him the truth. This method comes from a book I'm reading at the minute called Warren Buffett and the Interpretation of Financial Statements. I just finished reading Value Investing, which is a behemoth of a book. This book contains a lot more modern wisdom and the chapters are way shorter. One particularly short chapter in this book, it's only 1 page long, is how Warren Buffett knows who is telling the truth. The issue is for us investors, particularly us retail investors, is that sometimes companies like to pretend that they're making more money than they actually are, which I know will come as a huge surprise to all of you here. Now, the first thing that Warren Buffett does in order to check whether a company is lying is first he goes to the income statement. Now, he recommends using MSN, but that's probably because he has shares in Microsoft and his best buddy is Bill Gates. I personally use a site called financecharts.com, which is free and it makes getting financial information super easy. I'll include a link for this in the description. Current corporation tax in America is roughly 35%. So what you want to do is find the pre-tax operating income and deduct 35% from it. Now, take this number, this 35%, and check that against what the company paid in taxes. While making this video, I'll make sure that I find an example of this on the SEC website and include a link in the description. Right guys, I've discovered while editing this video that you do not need to go to the SEC website. You can just use financecharts.com. You go to the financials tab and then the income statement, and then go down to net income before taxes. And then right underneath that, they have what they paid in taxes. So these are the only 2 lines of the statement that you need, and you can just use financecharts.com. I know it might look like that these 2 numbers are pulled from the same place. However, the companies use different accountants in different areas of the accounting part of the business to create these 2 numbers. They have accountants for income and they have accountants for taxes. So even though it looks like these 2 numbers are attached, they've actually been filed separately. So make sure that you do the math yourself. With that said, let's go back to the video. I think this method works particularly well if you're buying private companies, not public companies, where there's an added need or incentive to make sure that the companies are telling you the truth. But the general gist of this is companies can lie to the IRS and put another figure in their financial statements. It might be very silly of them to do this, but unless the IRS actually audit them that year, then they're going to get away with it. So companies that are willing to lie to the IRS are probably also willing to lie to shareholders. Another thing this book is constantly talking about is trying to find companies with a really high, consistent gross margin, or what they like to call a durable competitive advantage. Companies with high gross margin and durable competitive advantages don't have to look for ways to cheat the IRS and shareholders to make money. That's one of the greatest advantages of buying quality businesses. However, what they don't mention in this book is that if you really want to make money, you've got to do this.